With up to 87,000 new IRS agents on the way now that the Inflation Reduction Act is unleashing a tougher IRS, there's lots of text about tax audits. The widely published 87,000 figure appears to come from a 2021 Treasury Department study saying that the IRS could hire about that many with $80 billion of funding. In any event, there's more talk of audits. Tax returns are annual, and getting them filed also means starting the clock ticking for how long the IRS has to audit you. But when might you be in the clear? Your audit exposure is at least 3 years from when you file your return, but you might be at risk for years more. In fact, the time periods can be downright frightening in some cases. Tax lawyers and accountants are used to monitoring the duration of their clients' audit exposure, and so should you. If you want to watch the calendar until you are clear of audits, in most cases, that will be either 3 years or 6 years. But in some cases, even though you filed and thought everything was in order, the statute of limitations never runs. Let's start with the basic 3-year rule, but in many cases, IRS can audit 6 tax years, not 3. So if you are thinking you only need to look over your shoulder for 3 years, that isn't always so. For example, the usual 3 years is doubled to 6 if you omitted more than 25% of your income. If you overstate your cost basis on something you sell, that counts too. So if it has the effect of understating your income by more than 25%, the IRS gets 6 years. The 3 years is also doubled if you omitted more than $5,000 of foreign income, say, interest on an overseas account, even if you disclose the account. There are just some of 13 key IRS statute of limitation rules. Even worse, don't omit Form 3520 for gifts or inheritance from foreign nationals, or Form 8938 for overseas assets. If you skip one of these forms, the IRS clock never even starts to run. Of course, the IRS also has no time limit if you never file a return. For unfiled tax returns, criminal violations or fraud, the IRS can take its time. In most criminal or civil tax cases, though, the practical limit is 6 years. What other tax forms allow the IRS to audit forever? If you own part of a foreign corporation, it can trigger reporting, including filing an IRS Form 5471. It is an understatement to say this form is important. Failing to file it means penalties, generally $10 per form. A separate penalty can apply to each Form 5471 filed late, incomplete or inaccurate. This penalty can apply even if no tax is due on the return. That is harsh, but the rule about the statute of limitations is even harsher. If you fail to file a required Form 5471, your entire tax return remains open for audit indefinitely. This override of the normal IRS statute of limitations is sweeping. The IRS not only has an indefinite period to examine and assess taxes on items relating to the missing Form 5471,